Okay, welcome back to my Vanguard portfolio update now into 2023, looking at the month of February. I cannot believe how fast another month has gone. Now, as usual, just before we head into the numbers, let's have a little bit of a market recap, seeing what's gone on in the world, because January has been pretty crazy and pretty interesting when it comes to the stock market. In fact, this last month, the S&P 500 had its best January in 4 years. Now, fun fact for you, in January, the 31st of January specifically, has been the best day of the month of January for the past 70 years or so. Now, that doesn't mean the next time we get round to January of next year, you suddenly put all your money in there. It's just an interesting thing to look at, and it didn't disappoint this year. Now, pretty much everything went up and seemingly went to the moon, and everyone just forgot about all the bad things going on in the world. The big tech players as well had an amazing month. In fact, one of their best months since 2001, apparently. And we all know what happened around that time. Stocks, unfortunately, just kept going down and down and down. Whether history is going to repeat itself, I don't know. Let's not try and make any predictions just yet. Now, keeping on the topic of those big tech players and those big tech giants, all of them had their earnings last week. So we had Meta, Amazon, Apple and Google all come out and report to the market to tell you what they'd done in the last quarter. Without going into too much detail on each one, I think it's fair to say that it was a fairly mixed bag. There were some good numbers in there, some bad ones in there. Most people didn't really stand up to expectations. However, I think the market thought they might do a lot worse than they actually did. And then, of course, pricing just did whatever it wanted to, and the market sent them through the roof most of the time. Now, as I record this on Friday, the market has had an amazing day the day before, and we are going to see a little bit of a correction going back down today. But some of these stocks have had an absolutely crazy week. Anyway, let's jump onto the laptop and jump into some of these numbers on my Vanguard pension and my stocks and shares ISA. One thing to say, I have had a sneak peek at these numbers. Now, just remember, last time we did this update, we were negative, and I'll put this up on screen now, we were nearly £2,500 down across both of the accounts. Now, let me just quickly show you what a very small amount of time can do in the stock market. So, as you can see now on screen, we are up across both of the accounts over £1,700, which is just an insane rally over that very, very short period of time, which really is a reminder, not a justification about how well we've invested, but just a reminder that really anything is possible in the stock market. Anyway, let's head over to the pension first. As regular viewers will know, this is a personal pension that I've collected all of my previous workplace ones too, so I can manage it myself. You can do that if you want, completely up to you. Just remember, I'm not a professional financial advisor, so please do your own research and make sure you know what you're doing, because it is very tempting to do very stupid stuff when you get in control of your own money. Anyway, have a look here. It's a very, very simple portfolio, heavy weighting toward VUSA, which is an ETF for the S&P 500, with a small allocation to emerging markets. At the moment, because the S&P 500 has been doing pretty well compared to emerging markets, the emerging markets are lagging a bit in terms of the weightings. I'd probably increase those. Now, on a couple of things, let's just have a look at performance, because this is going to be interesting to see how much the performance has swung because of the performance of the market. If we go to that performance tab, and then we go to month, which is always an interesting one, just to see how things change in that short term. You'll see here the amazing returns we've had compared to going back to December. You can see at end of December, the end of 22 was a pretty horrible year for all of us investors out there. Unfortunately, very, very bad if you'd started in the last year or so. That's definitely not a great place to begin as an investor. So press F to pay respects to everyone in the chat in the comment section below. Anyway, now, as you can see, we've completed a full month of January and a couple of days into February now, and you can already see we're back into the green. Now, remember, as I always say, as a long-term investor, I don't care about these short-term price movements. Now, the reason I do these portfolio updates is to really show you what can happen and what to be prepared for as an investor, whether you've been investing for many, many years or you're just getting started. You can quite happily start and have the most greatest rally you've ever seen in your life, or you can start and have the most terrible time and think investing isn't for you and you've timed it all terribly wrong and everything's going in the wrong direction. However, again, one of the best things you can do, as we always go back to on the channel, is to invest consistently month after month, or just whenever you can, over that long, long period of time, and you give yourself the best chance, especially when we're using index funds like we are in this account. Now, just a reminder while we're here as well, if you are invested in VUSA, remember that you do get a dividend. That did appear a bit late, but that is now in the account, and I think I've already reinvested mine. I've got £43 here, as you can see on screen, left in the account. A share of VUSA is 60 something pounds, so I'll have to wait until the next dividend to get myself some more shares. But do check your Vanguard accounts if you are invested in VUSA, because as usual, as I say this many times now on these portfolio updates, Vanguard doesn't send us any email, any notification whatsoever that cash has been put in your account, which is so bad. They really need to change that because that is such a basic little bit of information. All these modern apps now that we use, Trading 212, Free Trade, you name it, all send you a notification saying you've been paid income, you've been paid a dividend. But Vanguard, one of the biggest players in the industry, can't get that sorted. That will be a momentous day. I might even make a whole video dedicated to it if they ever do an email notification. Anyway, nice and straightforward then. And again, just on those dividend topics, I am very tempted, if I'm honest, of changing myself out of the USA into the US Equity Accumulation Index Fund, which is a mutual fund, not an ETF, so I don't have to bother doing anything with these dividends. Watch this space. I may do that. I'll be interested in your thoughts as per usual in the comment section, just so I don't have to bother with those dividends moving forward. It's not really going to affect the long-term outcome of the investment, no doubt. The equity fund has more than just the S&P 500, has the whole of the US market in it. So watch this space, but I'll have a think about that. Just means more of a hands-off approach for me personally in the pension account, because really I just want to set and forget this and maybe make some contributions as and when I can as well. Now heading over to the ISA account, we can see we are in the green. Now, just because I said I'm not bothered about short-term price movements, it doesn't mean I'm not affected when I see green. That is a positive thing, and it is nice for the psyche as an investor to remember that things can go up as well, because we have had such a miserable last year where things have just gone down and down and down in quite a slow, depressing way. But however, for the very, very long term, of course, really, I would like the price to stay a little bit low if I'm being selfish, so I can then benefit later on. The portfolio is the same though. You will notice that I haven't been contributing any additional money to this ISA. I am going to be sorting out all of my investments over the next couple of months though, so do watch this space. I'm going to make sure everything gets put into an ISA, or at least as much as possible. I'm going to use up my tax year allowance from this year, and I'm going to make sure I use up my full year's allowance next year as well, using money I've got across my different portfolios. So do watch this space. The Vanguard one will just stay as it is at the moment. I'm not going to add to this one for the rest of the financial year, and I haven't actually made any additional contributions to the fund apart from the 2 purchases I did put in initially. So while I just get everything up on screen now for the complete portfolio, if you are interested, you can have a little nosy around. There's nothing really too exciting there to have a look at. I think one lesson that we can take over the last couple of months is that really anything can happen, and happen very, very quickly. And especially sentiment can change very, very quick. Now, if you remember last month and just a few weeks before that, lots of you, no doubt, were feeling pretty bearish about the stock market, pretty bad about investing, and you were thinking that you'd picked the worst time to invest and everything was going down, and the market could still see further to go and keep going down to an even lower low. Now, that could still be the case, but of course, how quickly does sentiment change? And the answer is extremely quickly. I mean, just this month alone, look at some of the tech stocks and look at some of the movements we've seen. Tesla, we can't avoid talking about Tesla, can we? Is up 80% in a month, which is insane. Apple, 23%, the world's largest company, in 23% move in just a single month. That's just also crazy. And Meta, 50% up in a month. And just yesterday, up around 25 to 30%, which is just incredible. And certainly when I look at the news articles and different videos here on YouTube or other people talking on Twitter, seemingly now the bear market's over, everything's going to rally to the moon. And I think that little bit of fear is now creeping in actually for some investors, saying, I better get on board now because otherwise I'm going to miss the boat. And just step back for a second if you're kind of feeling those and think, hang on, that's exactly the feeling that you kind of want to avoid. Again, you're getting into the same trap as a retail investor does most of the time, how you end up selling on the way down and now you're only buying because the stock's going up. Just be really, really careful of that. And again, it reminds us how important our emotions are and how controlling those is one of the single most important thing. In fact, this always reminds me of some of the biases we have as investors, like the recency bias, only looking back to the most recent future, and our loss aversion bias, where we fear the loss of something twice as much as we appreciate the gain, as we feel a gain of something. So just remember that thought and kind of hold on to that, and don't get too excited on the excitement end and don't get too bearish on the low end as well. So forget about how sad you were, and also don't get yourself too excited. And if anything, kind of squash those emotions down to as narrow as possible, and you have to be a bit of a boring so-and-so when it comes to being an investor. Otherwise, you end up making some crazy decisions. Now, in fact, this reminds me of a really good book. Let me just get it. It's just above me now. Now, this is a book I didn't mention in my book review video, which I did, which you can watch after this one, which I'll remind you of. It's by Daniel Kahneman, and it is Thinking Fast and Slow. Now, this book goes over kind of more of the psychology, not just under an investing perspective, but more of your psychology and your biases and the way your brain thinks. And effectively the two different parts of your brain, the one that works out things very quickly and automatically, reacting to emotions, and the other kind of more computational part of your brain going through making decisions. Very, very interesting. Not the easiest of reads, but that is definitely worth one picking up. So anyway, are we through the worst of it? Now we're about to enter into a new bull market for 2023. Honestly, I have no idea. If we do continue to rally up, that's great. That's just the way things are. If things go back down to a bottom and another bear market, that's just the way things are. How you react to it is going to be the most important thing. So as usual, I'll share every single month and make sure I keep you updated. But as usual, one of the good things about doing a portfolio update is it not only holds me accountable, but it's also good for yourself as well, if you're a new investor especially, to see how things really are. This is just the price of admission. Anything can happen in the short term. Doesn't make you a good investor if you invest now and things go up. Doesn't make you a bad investor if you invest now and things go down as well. So just remember that one. Anyway, if you're looking for an interesting video I did recently, then I do have 40 money and investing books that I did read, and I think you're going to be interested in some of the lessons that I've learned there. Otherwise, enjoy this next video. I will see you in the next one. And as always, happy investing.